Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to be taking a little look at dollar Swiss as we placed a trade and opportunity on this last night. And the reason being is just that Swiss has been so weak for so long that we expected some kind of turnaround in that strength. And what we looked at was the fact that we were approaching these key actual yearly highs. Okay, so typically when the market comes to a high point such as a yearly high, we see a pretty significant sell-off sometimes. Okay, so that's what we're expecting here on dollar Swiss. We actually go back into November 2018 as well. The market also made a high here around about the 1.0129 area. So what we did was we looked at the recent high, which was March 2019. Looked at the high, which was around about the 10124 area. And we actually set our entry at 1.0125 with a 40 pip stop loss around about 1.0165. We're targeting back down at parity. Okay, you can see parity is quite significant on dollar Swiss. So what we're looking for is the market to reject this area and push back down into those this key support zone. Okay, if it takes out this key support zone, then we're looking for the market to drop back into this demand zone where kind of around about that 0.9900 level as well. Okay, so having a little look at this, the market has triggered. We are in this trade. What we really need to see is a risk off sentiment. Get some safe haven buying of the Swiss franc in order for this trade to keep moving. Now, we did get triggered because of the retail sales in the US. Now, the retail sales were predicted to be higher already, so there was nothing significant there, but it estimated or or basically the actual news that came out was forecast to be at 0.9% and came in at 1.6%. So significantly higher than anticipated, which is seeing a good boost to the US dollar at the moment. So if I just bring in the dollar index on the side, we like to kind of side by side these comparisons. Let me just bring in our template over here. Apply to all, click OK. And then we're going to go and grab the dollar index, which is just here. Now, the dollar actually spiked out of our little area where we were expecting some selling off in the dollar, and it came towards this key resistance area again. It's continuing to push it, and that's just due to those retail sales. And now we're back at this resistance, so we could see a little bit of dollar selling from this resistance zone again, which could lead to the dollar Swiss moving lower as well. Okay, we're looking at gold longs as well, which we're in at the minute, which seems to be moving okay. So we'd like to see a little bit of dollar selling off just to cement our couple of positions in here. Okay, so dollar Swiss, we're in. The reason is just because we're at these highs in here. The market likes to reject key highs sometimes, so we're just looking for the market to reject this. If we do see any kind of bearish daily candle off of this, then we can look for continuation trades in very similar fashion to March 2019 already, just back down into this point. Okay, so have a little look at that. If you have any opposing ideas or anything, just give us a comment below. If you're watching on YouTube, please like and subscribe. If you're watching on TradingView, give us a follow here. If you're in dollar Swiss, how do you see this trade going? What would you do if you're not in? Thanks for watching. Speak to you soon.